thoughts. So this question is, do you believe there is a correlation between the US inflation or market generally? Okay, so this is a verbatim, the US inflation or markets and the Australian property market. Like, I'm not a macroeconomist, okay? I'm a property investor, and you know, I guess in part of what we do at Ripehouse is, you know, I'll go into it a little bit deeper than most, but, you know, I'm not an economist. I don't have a background in economist, so this is just my opinion, all right? And I guess I'm a student of, you know, economic theory and also market theory, and obviously exposure to analysing and researching the property market has sort of, I've gone into this a lot deeper than many people. But for those that are really sort of students of this or are interested in how the wider economy works, this is a great video. Okay, so Principles by Ray Dalio. If you haven't already done so, do yourself a favour and really dig into what Ray Dalio does. Okay, he is a really smart gentleman, a really nice guy from, you know, I don't know him, he's the owner of the largest hedge fund in the world, or at one point. You know, extremely high net worth individual, but really, really switched on. And he takes the time, he's now sold out of his active positions, billions and billions of dollars, and now dedicated this sort of the final third of his life to education, right? And it's not education coming from a point of capitalist greed, it's true empowerment of people and changing the financial systems of the world to the better. Right, so he released this video, it's now going back almost 10 years, but it's called How the Economic Machine Works. It's about the debt cycle, okay? It's about how inflation works in with interest rates and how there are cycles that economies go through. You know, he is all about, you know, a larger, longer term cycle. All right. He's also got a wonderful book. His actual name, the book is called Principles, right? So it is quite a large read. It does go into hundreds, literally hundreds of life lessons that he, as one of the most successful capitalists of all time, has learned. And it's not just about money management, but also how to be a person, humanity, right? It's a really interesting read. But the economic theories that he sort of talks through are really interesting. And my understanding of it has been, you know, with Nimai sort of mentioned that the book is also really good. It's really good, Nimai, and it is a bit dry, so it's sort of one of those visas, a slower burn, but it's definitely something where you go away and you go, hang on, I can apply that today, right? You'll get takeaways from it the moment you pick it up. But at a really high level, and this is my rudimentary understanding, but at a high level, particularly with, you know, COVID, or the lens of COVID. Let's try and draw linkages between what's happening in America back into Australia. And some of these are long bows, but I will really try and see what, you know, illustrate what I'm seeing in an Australian property economy with what's happening over in America. So obviously COVID, you know, through the world for 6, through the economic markets for 6. America has dealt with, you know, the lack of employment, lockdowns, all the disruption through printing money, okay, stimulating the economy. And at a really high level, the way they've stimulated that is by passing the money over to the Ray Dalios of the world, okay, using those companies, you know, the hedge funds to directly invest in equities. So they are literally moving money onto the market capitalisation of these companies. Right, and that's why we've seen the share, you know, the stock market, you know, the Treasury printing money, pumping it into these investment vehicles that are now investing into equities, amongst other things. Okay, this is very simplified. That has now created this inflationary pressure through the equities market in the US, and we're just at all-time highs. Okay, and we haven't even seen the recovery yet kick in. So whilst there is this stimulus, whilst there is this money printing occurring over in America, you know, the vehicle of stimulus is the equities market. It is a form of inflation. There is talk now that this is going to be slowed down. Is the cost of bread increasing? You know, a traditional measure of inflation? That's arguable. You know, is employment healthy? That is arguable. Is the spending power of individuals increasing? That's arguable. But there is somewhat inflation in the market through the equities asset class, which then arguably then trickles down to employees. Companies are better off. They've got more market capitalisation. They've got more confidence with low interest rates to borrow, to stimulate their own businesses. You know, so that is the theory with what is happening over in the US with inflation and how that is, you know, represented in the markets. Now, if we compare and contrast, which is sort of outside the question here, What is different over here in Australia? Well, the policies are different, the execution is different, but the intent is very similar. If you go back 18 months, 2 years, or 18 months really, around how Australia was looking at weathering the storm, right? If you look at America, equities is the primary asset class that Americans use to generate wealth. It's far and away more popular than investment properties. If you were to compare one to the other, equities and the great American dream is built on companies and not property. In Australia, it is built on property. It's our national pastime. And so the government looked at property, and this isn't just my opinion, and looked at property and looked at what they needed to do, and then chose property as the asset class to stimulate and apply the inflationary pressure to then stimulate the wider economy. So you look at all of the building grants, you look at stamp duty concessions, okay, you look at interest rates as a very low point and the RBA policies as all stimulus. You look at APRA being removed, you look at positive environments around banks and sentiment around banks and treatment with the banks, the lenders. You look at all of these factors, a combination of factors to show the Australian government's intent to stimulate the economy through inflationary pressure on property. Okay, and that's it's the same concept, it's the same delivery, but it's different execution. And what has it obviously meant to Australian property? Well, in America, it's meant record highs, even through this, disastrous COVID impact on companies, with many of them not shutting down. We had a very quick V-shaped recovery, and now it's kept powering on to all-time record highs. Same things happened in Australian property. All right, very quick consolidation. Even Sydney, that was at the top of a cycle, suddenly got another large, long, repeat and blow off top to the market. Okay, so we've seen this sort of continue on. Whilst things are still the same, we've seen a slight change to the fixed interest rates, 3 or 4, 5-year fixed interest rates. It's not current variable interest rates. It's not now. The banks are saying, yes, in the future we do expect interest rates to increase, but the RBA have been saying that the whole time, 2024. All right, even though the RBA this week on Tuesday once again announced that, yes, we reiterate variable interest rates, at least from our doing, will not be increased until 2024. They do not see the market conditions to justify increasing interest rates. And while they are this low, we are seeing the stimulus that is going into the Australian property economy. Okay, so they are somewhat linked. If America comes down, this is probably answering the question, very directly. If the American economy pulls back, goes into a recovery, it does impact, obviously, many westernised economies. But they are going about the same motions in different ways. And in that way, I think they are truly linked as well. This is also bringing into the equation, well, all of this stimulus. Australians are running around at the moment going, God, I've got so much money profit in my property, I'm going to go and buy this car. My job's I'm still working from home and, it's a little bit iffy about the company overall, but I've got all this equity in my property, I'm going to go and do the renovation. So the property market the profits in the property market is stimulating, through the goodwill and sentiment of Australian consumers, the wider economy. People are bullish, right? Their confidence is increasing. And that's now creating inflationary pressure on the wider market. The cost of a loaf of bread, the cost of those consumables. So property prices have grown, but now you are starting to see a shift through, as employment sort of continues to grow, spending power and confidence increases in the cost of goods, the cost of living and affordability, etc. Inflation is now starting to become a topic of conversation. And traditionally, the lever that is pulled to slow down inflation is increasing interest rates. Okay, but that's going to, if it happens anytime soon, completely lose the confidence, and then the inflation, it'll be, a self-fulfilling cycle. Very quickly, inflation will come back in check when they pull that lever. But they also have said recently in this week that they're not ready yet. Okay, we're still not even touching the sides. Inflation is still not within even target range, and is not estimated to be in the target range until the end of next year. Okay, so they were still jumping the gun here. Yes, inflation is something that needs to be monitored, and yes, the trigger, and this is all around Ray Dalio, the trigger to slow down inflation is, increasing interest rates, but we're not even yet in the target inflation range. Okay, we haven't had that recovery yet. There are a whole other raft of topics. I had an interesting discussion this morning with a client on this around, hyperinflation, money printing. inflation really getting out of control, and then it's not down to confidence, okay? It's down to stimulus. So if people increase interest rates, it's still not slowing down consumer sentiment, and then you get to a situation where you have hyperinflation, where inflation can't be slowed down by increasing interest rates, and you have nowhere to go. And this is around the longer term debt cycle. That's potential. There is a doom and gloom scenario that is a world that we might live in the next 5 to 10 years. That is speculation. We have to work with what is in front of us, have faith in the RBA and what they've done. They've taken us through this ship very well, sailed the ship through the night very well through this process. And we have got to look at what is in front of us for the next few months and years as opportunities to make money, and to invest. There still is a lot of opportunity. And for the moment, Australian residential property is still the asset class that is being stimulated, and it still is today. And if everything is to stay as they are now and as it has been for the last 12 months, who is to say that the price performance of property is not going to be similar in 2022 as it has been in 2021? There has to be something different for it to slow down, is the way that I see it. So it's been a lot of talking, guys. Hopefully that made sense. I'd love to hear your thought.